So being that the SPY had this crazy move down, and everyone is getting the news on, hey, the stock market had one of the biggest moves down, and Nvidia had its biggest move down, and what do you think people coming in today, this morning, are ready to do? Right? They're thinking the right direction is down, right? But at the same time, you gotta see it from the perspective of normal price action. And being that this is such a huge move down, usually there's a relief that comes in, right? And that relief is called a pullback. And if you was expecting a further move down, it could have happened, but what was likely to happen was a relief from all of this pressure to the downside, right? This wasn't a normal move down. This was an extreme move down, one of the biggest moves down. And usually you could, in a market crash, you would see multiple moves down with very little reliefs. But in a normal market, I guess you could gauge it in different ways, where one market is obviously bearish, so you're going to see less pullbacks, more moves down. And then you have a ranging market where you'll see a mixer of both. And then you have a bull market where you'll see less moves to the downside and more moves to the upside. So just by looking at how much we've pushed down versus how much we've pushed up will give you a good idea of the strength in the direction, right? And it's only really two directions, is up or down, and the price is gonna range until it figures that direction out, right? So that's what we have on SPY. Now I could get rid of these lines, but before we do, let's see where I got this from. It's crazy. I just be drawing random lines. It looked like this was a bull flag, and then there was another bull flag, and then I just extended this out, and then I happened to use this line and then this line as resistance. If we zoom in, you can see it's pretty good. This one here, this one was respected as support, respected as resistance. But yeah, just having fun. I'm gonna delete these just so we could get a new drawing going on. Delete. And if I'm just drawing this from today, I'm gonna connect the highs. I like this high. This came down, big move down, and then it came up right before making its next move down. So this makes a nice high to use. This is the obvious high. I could use this high as high, but I'm gonna use where we close that right there, and then I'm going to duplicate that and then drag it to a line that is being respected, which is right there. All right, now let's zoom in. You can see we use that as support, and here you can see it's using that. This is showing you that this is being respected because the candle couldn't close past it. Right, it got above it but couldn't close past it. This is a regular high. What is this showing you? It's showing you that price has been in a range after a big move down, which forms a bear flag. Right, bear flags, you're looking for price to break out this range and trend either to the upside or the downside, but mainly the downside, since the trend is moving down. We have some people coming on in. Now, my other reason for the expectations to the downside is because I don't see any levels that we could really stop at until we get to about 545. Right now, this is the weekly time frame. We're just gonna do some digging. Now, I'm gonna just go ahead and do my thing, do some drawing. So this is obviously a big move up. Any red candles, any consolidation could be considered a demand zone, right? So this here, consolidation, and then you see this big move up. So this was a consolidation before this big move. So what was you guys doing in this consolidation? Probably gathering some orders, right? Now I'm gonna draw this demand zone like that, right? That's how I'm gonna draw it. Now you can see we kind of respected it as support because the candle couldn't close under it. It actually tried to close above it, but then eventually it got under, came down, or whatever. But it got right back above it, and as it's coming down, this could hold as a level of support. All right, now we're just gonna zoom in to the daily. Well, one thing to notice back on this weekly is the 9 EMA. This is the one thing that could keep us in bull mode. I say I'm not really expecting it to, because this is a huge move up, and I feel like for the pullback that it wants to give us, it should at least come down maybe like 30 to the 38% on the Fibonacci. So consider this one wave. If we go down 100% of this wave, right, if this is the low and that's the high, 100% back down would be here. 50% of that move will be here. 38% of that move will be here. So 38% is usually a nice, healthy-ish pullback for a strong trend, right? 61.8 is a popular, normal, healthy trend. And then you have, other levels you could use. But there's some confluence at this Fibonacci 38 level and this demand zone, which is also 534. So it's about 542 to 544. Now that's on the weekly. Let's go to the daily. I'm gonna get rid of this Fibonacci. Now another reason for the price to continue coming down is this gap we have here. Right? Call this gap the high of 544.96. So this is what I do. I like to be exact with my levels. Now before we get to that gap, we got to break this level at 548.88. Oops. 548.88, which we have not yet. All right, so we got to keep that in mind. We could try it. Could try the level. Let me see. Did we get to it? 548.88. Actually, we did. We actually tried this level in aftermarket and pre-market, and it held up. Double bottom, triple bottom, and then created a new high after this high. But we could consider this still a range in itself. So the thing is, it has validation to go up based on, right? This is the key. Based on, you got to know what's your reasons. Based on this support level holding up as support. You can't see it on this daily time frame because the price action showed it to you on the pre-market and aftermarket hours. The daily chart is only going to show you what happened during the open market hours from 9:30 to 4 p.m. Eastern. So for us to have validation of this gap being filled, we got to get through this level first, which we haven't. All right, but at the same time, this is a short-term downtrend after a huge move up, so this has a lot of validation for us to continue going down. So what I'm saying is there's mixed I guess perspectives of bullish, bearish, which isn't the best. It doesn't allow us the best probabilities for trades, right? There's better market environments for probability of direction. Does that mean we can't get great trades? Nope. Of course we could get great trades no matter the direction. It's just we have to wait, be more disciplined, because there's more fake outs and more chop when we're in this phase, right? You got to think about what is a good trade for you. A good trade might be 10%, right? Maybe you got big money and you put in 10K, 100K on the line, and you just need a good, 1K, 10K real quick. 10% is good. These opportunities are here every day, all day. It's just what part of the market do you want to catch? Do you want to catch the bottom? Do you want to catch the top? Right? Look, this line didn't exist. Well, I think somebody might have to be muted real quick. All right, I'm gonna mute everybody. So it depends on the market structure. Do you want to catch the bottoms like this level here? If you would have done the work by drawing your levels of support and resistance, notice we're all over, right? This is the 4-hour chart, and you can't even see where this level came from, right? That's why we just go to the daily. Now you can see this is the level of support from the candle low. So you got to be active, right? You got to be active in order to keep up with the change in market. That's what makes trading tough, because this market is changing. And when I was saying this to my mom earlier, she asked how she was like, oh, the stock market went down today. And I'm like, nah, it went down yesterday and it went up today. And I'm like, yeah, the news, they're delayed, they're letting you know what happened. And that's how they somewhat manipulate us, because when the market comes down and everyone's like, okay, it's gonna go down further, that's when they decide to take it up. And it happens to go along with natural price action, because it needs to pull back at certain points. So once you get good at understanding the natural flow of price, then you could have the most high probability perspective of trading, because you got to think about what you're actually trying to trade, right? There's different stocks, different ETFs, different markets. There's forex, crypto, stocks, but at the end of the day, you're trading the price, right? See this bar, 58, 56, whatever the number is. This is the flow of how the price is moving, right? Ups and downs, highs and lows, support, resistance, and it doesn't change wherever there's a price moving, whether it's an auction for cars or whatever the case is. If there's buyers and sellers, this is the natural flow of how price moves. And yeah, it could look like this is random and uncertain, but you'll be surprised that this has happened many times over and over and over, right? And you're probably wondering, well, what are you talking about? What has happened over and over and over? I don't know what you see, right? Well, that comes down to us being able to recognize patterns. And in order to recognize patterns, you got to think about, what are you trying to recognize in the first place, right? Because all we see is just candles, ups and downs, moving averages, right? Bunch of lines. Well, that's the fun thing, because it's kind of like you could create and recognize whatever you want to recognize, right? And I could tell you what I'm recognizing, but I don't want to limit your ability to create and see what else is out there, right? But to get straight to the point, there is a double top here. There is a lower high, right? So even though this could be random, this could take 10 days, 20 days, 50 days, this is still a lower high than this one. So being able to recognize highs and lows will put you at an edge no matter where you're at, right? Being able to just draw lines and know what's the right line to draw gives you an edge, all right? I'm just drawing random stuff, but I could see this line, that this candle could not close or open above this one. This one couldn't close, so this is being respected there, respected as resistance, respected as resistance, respected as support, and we closed under this. All right. Notice that this is like geometry, right? I took this high and low, duplicated and dragged it because the market is very interesting. It's really like a snowflake. You know how some snowflakes is symmetrical. You could just draw stuff and it happens to work out. Let's see, 4-hour chart. Now this is interesting because now we're getting a better picture of how this line served us. This is interesting also because this isn't a straight line, it's a diagonal line. Now you can see here, support, support, resistance, resistance. We had some consolidation, broke out of it, support. Now this is showing you this is a range, close under it, and now this is the big time confluence here, because this is a trend line and this is also a moving average, and this is a test of the moving average and a reaction, a bearish reaction with a slight bullish pressure. Seeing this wick here, how long it is, right? It's not a short wick, it's a pretty long wick. You see how you gotta be careful though. Just because you see a long wick doesn't mean it's gonna bounce. You gotta wait for green candles, because this had a long wick, this had a long wick, this had a long wick, and then eventually had that green candle. So notice waiting for the green candle was gonna allow you to get that nice move. This is somewhat still bullish because look at the candle closes still inside the range even though we broke outside of it. And like we said, from this level here, this is a support reversal, and this could be forming a higher low which could take us above 554, right, up to about 555, right? And that is pretty much the situation to the upside, right? Don't gotta complicate it. It's just higher highs, higher lows, understanding what the levels are in your way, and if the market is trending, is arranging. It's kind of a mix of both. We're overall trending down. Let me not say that. We're overall ranging because look, couldn't break that level yet, but a step down, we're trending to the downside, right, on a lower time frame. But then on the lower time frame, we're actually bullish, right? So it's like three different perspectives that we're taking a look at here. Zoom user says Chevron. All right, let's do Chevron. That is CVX. Chevy. Okay. This is a nice bear flag that I'm seeing here. I'm just pull out my handy dandy drawing tool. Not so easy to draw. Okay. This is crazy fake outs. Alright, I don't really like that line, but I'm gonna see what it lines up with. Yeah, I'm not a fan. I'm gonna remove this one, and then I'm gonna remove this one and just redraw. So let me see, the price action came down. I would say this is, let me see, I could use this high. All right, CVX. All right, so we're gonna just go ahead and just start drawing. You could connect those, and then I'm gonna duplicate this, and this should give us a better line, just like a little bit more decent. Support. Break, candle close. This was your key. Bow. Candle close. Lower highs. Downtrend. Okay, see that reaction off of that, bow. Where is it gonna go to, or where is it likely to go to? You can see the next support is about, you can see that there, about 141. We're at 142. Then you got the low of this chart, 139.62. And if we hop to the higher time frame on the daily, whoa, this is a big room down. If you do some of that, now this is pretty major. This is pretty major. All right. If you break this big old trend line, you got a big old move down. This was a gap here, right? That's the thing. I don't like trading stuff that still has gaps to fill, and this has filled the gap. Now the interesting thing that we could do is simply just measure the length of this move here. You could start from here down, but I'm gonna actually start from here. So 159. I'm gonna round it to 160, and then okay, 142. So about $8 move, right? This is the pole, the length of the pole. So I'm gonna start that next length like right about here, 146.90. What's that? 7. Let's see, the breakout is like right here. So I'm gonna use 146 and use that rounded 8. So 146 minus 8, because we're going down. It's gonna be 138. So 138 will be the next leg down, right? 138 could be the next leg down. Where would that put us? It will put us under this breakout level. And another way we could measure is, okay, here we got 139. It pulled all the way back up to 149, 150. That's at least 10. So 139 minus 10, that's going to put us at about 129. 129 will put us about here. So testing this real low. So if you look at the price action, this big move up, that was the real low of this action there. So this candle is 130.52. So it's important to know where your real candles are, and you could do that by simply looking at the weekly time frame, right? This is a real candle here. This is the low, 132.50 something. You see, let me get that right. 132.54. 132.54. And this one here, 146. Nope, 139.62. So we got one touch that's showing you strong. A lot of momentum coming down. I feel like they could be a nice breakout to the downside. And if we do 132, 130 is a nice area where we could come down to. Now, if I'm looking at it from this perspective, 132 all the way up to 167. It's about, what's that, like 20, say 40. It's like 25 points, at least 25. You push that down, 140. That's like 20, then 115. It could bring you all the way down to 115. So this has some good targets to the downside. I don't know what's going on with oil. You guys could tell me a lot better. This is the situation. You got some demand areas wherever you see these red candles. You could start drawing some demand zones, and just seeing all this consolidation is ready to do something. Right, if you look at the monthly chart, you know, this thing consolidates. That's what it does, you know, and then eventually it has big moves down, consolidates as it's going up. Because if it's gonna move up, then just move up, right? If it's consolidating, then most likely it's telling you the direction is changing, and it's gonna have that move down. This has had a big move up, consolidation. Okay, you could have moved up there, and now you're breaking that trend line. It's a lot of pressure coming into this 50 EMA. So I would say on a monthly time frame, this is something to look out for. But with all of this testing of this area, I don't really see this 50 EMA holding up. And if that doesn't hold up, and a lot of people think it is, you could have a lot of orders, a big move coming down, right? I don't know what news needs to come out or whatever the case is, but this is interesting. This is a supply zone from there, which acted as a demand zone, somewhat of a demand zone there. It's a lot of little zones here. So 120. So if it does come down, I'm not seeing it really coming down lower than this 115. And this is the monthly, so this could 1, 2, 3, 4, like 5, 3 months. You know, so that means getting expiration dates for options expire like 6 months out, at least a year out. Hold on, maybe something cheap. You can check it out. Check out some what's this, November? Nah, September. So that's the 9. If you go to March, 6 months out. Puts, this is the put side, this is the call side, this is the out the money, this is in the money here. And if you go out the money to about, let's say 120, if you think the price is gonna get to like 115, be a little bit safer and grab like a 120 in case it doesn't get all the way to that. Obviously, if you could get something higher, then cool. But the cheapest ones, you know, obviously it gets a little bit riskier the farther you go. But with 6 months out, I think you'd be okay. See, 239. So yeah, one contract will call you $239. 168 if you want to get the 115 puts for March. And if you think this has a chance to move on down, and you don't have to hold it until it gets to 115 or 120, you can simply take whatever amount of profits that you feel like you're gonna get, and that's that. All right, Nvidia, the talk of the town. No prob. All right, so we got the monthly chart here on Nvidia. This is above this EMA after making a huge move all 2024. You got some bad news with Nvidia with this subpoena situation. Now, I don't know if with the bad news, it wasn't even bad news from earnings. It was a bad reaction from earnings, which wasn't really that bad, which is why we're all kind of confused at, are we going to really go down on Nvidia or are we going to go up? Now, with all that confusion, the price action did take a dive down yesterday. Let's take a look. Yeah, big move down yesterday. After another big move down. So 2 big moves down. Man, I do see some more potential downside, but there is reasons that it could potentially reverse. This is a highly traded at area. You're seeing some reaction, but also you're seeing the previous levels holding as resistance. So that's a big thing. You got a nice trend line you could draw. Let's see, using this bow. Could draw like that, or use this because this was the low. Cracked through it, came up. It was one drawing, and I drew a lot better. But what this is showing you is a bear flag, creating lower lows. This is creating higher lows, but that's what it does in a ranging market. Like a flag, it could do whatever it wants as long as you're not breaking that overall range, which should be drawn a little bit better, I believe. I think I had something going on. There's a lot of ways you could draw this, but Nvidia is chilling after hours just like the rest of the market. We're not really sure after Labor Day and going into the rest of the week what the market really wants to do, right? There's nothing really popping off on my watch list, and you got a couple things pushing down. Coin was the best pusher to the downside over the last few days, which I called out on my watch list. When was it? Let's check it out. Watch list. Let's check out coin. That's what we're looking for. On Thursday, 8:30. Well, August 30th, 9:39. Coin was at 188. Puts on watch. Why? Because it broke that level, closed beyond it, lower highs, and it's pushing to the downside. On a bigger time frame, it had a lot of room to drop, and then coin ended up doing something. Whoa. Like this. From that, I think 188, I believe, and it just tanked. Now it's at 160. 20 point move. That's a lot. It's a lot of money. Right? On the put side. Tesla. Called out Tesla today on the watch list. You can see today Tesla on watch to the upside after a few days, few months. It was at 218, and we ended up seeing Tesla move all the way up to 122 that day. Today, all right, came back down to the 118, gave you some moves to the upside a couple times. All right, so keep Tesla on watch. To the upside, you could always draw your nice trend lines to see what's going on. All right, you got Nike, Roku, Netflix. All these are looking like they're lost and confused. Right? What do I do without the SPY? Alright, so Google, lost and confused. Microsoft, right? These are like the people your mom told you not to hang out with. Right? They don't have no purpose right now. They're just wandering. Celsius has a purpose, right? He at least knows he ain't nothing, right? All right, so Celsius dropped crazy. I had that on a put watch, but I didn't think it was gonna drop on its own, pretty much, without the market. But that just shows you how strong the season is, and I want you guys to see that with all this analyses, it seems like, oh, I'm just doing all this, whatever, right? But what I'm doing is I'm gathering data, right? I'm being able to feel the air, feel the environment, because that's going to allow you to be able to see things and know things that isn't even there, right? It's an edge that you can't see. You can only feel it. But yeah, you kind of do got to see stuff in order to feel it, right? To program your brain to know what things look like, feel like, and then you just have another aspect of it's intuition, pretty much, but you can't start off with it. You have to develop it by looking at the chart and categorizing stuff like, oh, okay, this is a high, this is a low, right? Because things are very erratic, choppy, but it's always the same format. And that's how we're able to be consistent, by just recognizing highs and lows for what they are. Some are bearish, some are bullish. We have calls, we have puts. Match the option with the direction and you make money. Manage your risk so you don't blow your account, and you could stay with steady progress with building your account, and focus on staying consistent at following your own plan. It takes work, but once you get it right, you have a blank check that you could pretty much make as much as you want, right? You have a printer. Doesn't matter where you're at, right? And I was just thinking, like, the difference between real estate and stocks. Like, real estate is great, like, I'm not in it right now. I would like to, but that is a different ball game in terms of what you get out of it, pros and cons. Like the cons is obviously you can't just get your money like that until you set things up, whether you got I guess um tenants or whatever. But with the stock market, the speed is literally like that. You got your money, you get in and you get out. But with the cons of speed from real estate, you actually, it does take a little more work to get your money, and that work sometimes have to come through people. But one thing is, with trading, you don't have to deal with people, right? But real estate you do. But the pro is that you build relationships, and I realize that's interesting. Like if you're just a trader, you're not really building relationships, but yourself, the ultimate relationship, really, honestly. So it's pros and cons all over. So honestly, it's good to do both, and there's other stuff out there. But yeah, the market, Amazon was one that was looking very bearish, close under that low. But let's see on the higher time frame, where did we head into? Okay, and see lower highs. This one, let's see, did it close under this low? See, it's protecting this low here. It's protecting it with this candle, right? You see that wick? That's why you gotta be really on point with these lines. All right, yeah, it's closed under it, but this wick, this low is protecting it. You gotta close under this one, right? That's what I teach in my course, and it's really helped me avoid fake outs, know what the real move is and the real direction. And it's very subtle. It took me years to figure it out, and just gotta know when to use it, how it's used, and it's very simple. Let's see. Remove the drawing. But yes, this Sunday is going down, right? This is the last chance to join the 6-week mentorship. It's gonna be the last of the year. Last for a while, probably. And this is gonna be a special one because it's gonna include the video library of everything that I know, and you could play that back, which in the future, once the mentorship is done, it's gonna cost about $3,000. And right now the 6-week mentorship is $600, and you're gonna get the video library online course along with it. So it's a huge steal. Right now I'm pretty much rewarding everyone in the mentorship with access to the video library, which is going to be updated and get better and better as time goes on, because I'm going to continue feeding it better and better techniques and explanations for how to make money. And it's the best deal, honestly. I have a payment plan for $100 a week, and check out the link in my bio, my link tree. So this is pretty much the stock market today. We are ranging, and we are in an overall downtrend, right? Even though we have reasons for the market to bounce and go up off of some key levels, this downtrend and overall uncertainty is pretty strong, and I feel like we have some more room to head down before we head up. All right, do we think the market's ready to head up now? I'm not seeing it. Show me a stock, show me a market that's moving up crazy today and sustaining those highs, right? You have Tesla that made a nice move, right? Made a nice move, but it's the only one, right? Fizzled out. Now this is a nice move from Tesla, but it didn't sustain its craziness, which we know Tesla for. So that's why I'm still iffy on it. And this is a significant move because we did break this huge trend line. You can see drawn from about the 4 hour. This is crazy, but this is a higher low that you're seeing with a nice move up with the volume to support. So that's why in my watch list I said Tesla on watch for the next few weeks and days to the upside. All right, chip stocks getting chewed up like a bag of Doritos. All right, that's why there's a lot of uncertainty here. SPY, it's a lot going on, so try not to get chopped up. Make sure you manage your risk. Use half or a quarter of what you usually use. Stay out the market if you really feel it in your gut that you don't really know what to do, because there's gonna be a day where the market explodes to the upside or downside, and you can make all of your week, all of your month in that one day, but you can't be part of it if you blow your account before that day comes. So with that said, I hope everyone enjoyed today's class, and I will see everyone in the Discord. All right, let me know if you guys have any questions, and I'll take care of you guys.